in my previous analysis on CAD CHF, what did I say? By the way, guys, I will link the analysis in description as well, so you can go and check it out. What did I say? I said, after this impulse to the downside and this retracement, we definitely want to see the market make the move to the downside. Specifically, the market was exactly here when I spoke about this pair. And what did I say? I said, from here, I definitely want to see the market start the move to the downside. If you ask me, why did you want to see exactly from here the market make the move to the downside? First of all, you find it in that analysis. Second of all, the reason for which is, first, if you want to measure a retracement in the market, where are you supposed to be taking your Fibonacci? From the high to the low of the impulse. Okay, first thing, if you want to measure a retracement, take the Fibonacci from the high to the low of the impulse. And what you will see that in this case, we had a perfect 0.618, so the golden ratio Fibonacci lining up perfectly with the previous structure support, now turned structure resistance at this area, which the market had to reject to the downside. So we wanted to see the move to the downside for the completion of the impulse correction and impulse pattern to the downside, specifically the start of the next impulse rejecting the 0.618 that was lining up with the structure. So on the monthly, everything bearish. Now, from a weekly perspective, what we have, we know that on the weekly we have strong structure here, which is the level that we wanted to see the market go and test. The market not only reached the level, but also broke it to the downside. At least it seems. We still don't know if this weekly candle will actually manage to close below the area. But what we do know is, from a daily point of view, we have a situation in which the market has created a nice M formation. Up, down, up, down. So nice M formation. After an M formation, what do you expect? You expect the market to give you a retracement to the neckline before the continuation to the downside. So it's pretty clear the way in which we will be approaching this pair with students, and how I suggest you approach it as well. Obviously, if you have a clear rule-based strategy that is showing the same things as mine. Now, the way in which we will be approaching this pair is very simple. First, we will be monitoring price action from a 4-hour perspective inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long to the neckline of the M formation. So the previous support now turned resistance for the completion of the pattern. And then again, at that point on the 4-hour, everything will be bullish, and we will be monitoring price action on the 4-hour time frame, waiting for the market to provide to us one of our valid entries for the continuation to the downside and creation of a lower low, completion of the impulse correction and impulse pattern to the downside. And obviously, inside of this area, we will also have the confluence of the Fibonacci taken from the high to the low of this impulse, a 50% confluence at the moment. So if you capitalize on this move to the downside, great job. I suggest that you take your profits from the move to the downside, because from here we're supposed to see a retracement, as I said also in my analysis yesterday.